what the world has now seen the U.S. do to Russia and the allies as well is cut them out of the global system. So any of the wealth, any of the assets that the government or a lot of the oligarchs in Russia held outside of Russia, they don't have access to it anymore. Because here's a simple fact. If you don't hold it, you don't own it. But everybody's watching that. So that's on a global government scale. But didn't Canada just do the same thing to their citizens that were protesting and they didn't like it? So boom, they just cut them out of the system just like that. And they're still not back into the system. And that was what, 5-6 weeks ago? It proves that you better have resources, real money, that is in your possession if you want to weather this financial storm that we're in, because it's not going to be so easy. If you can just remember back to, let's say September of 2019, the Federal Reserve had been raising interest rates and then running off their balance sheet. And then September 2019, the money market global plumbing of the whole system froze. And the Federal Reserve started printing money again. And they didn't stop, right? And so they want you to think that all of what they just did has nothing to do with inflation. But they came out and where they were targeting 2% inflation because you don't notice it even though they're robbing you of 2%, all of a sudden they're going to target an average. And as soon as they went there, I said, I hope everybody's ready for high inflation because they're telling you that's what's coming. And here we are. So we went into the crisis, which I guess we can say now because it's calmed down so much. And so now we needed another crisis. And so just like in the 60s and the 70s, we were lurching from crisis to crisis. And every crisis justifies more inflation, more money printing, more wealth transfer. But what it also does is it keeps everybody off balance, right? And if you're off balance, you can't think as clearly as if you were just focusing on one area and you were calm and you could see what they're doing. So it's really much of a cover-up for a change in the currency system. I'm not 100% sure that they have the new digital system in place yet. I don't know. They just release as much information as they want to release on that. But that's programmable money. So they're going to take something that they can inflate away, in this country, the dollars. I mean, you couldn't do that with gold. You can't inflate it away. But you could inflate it. You can inflate away the purchasing power of the currency. Now they're taking us into programmable money, which gives them a whole lot more control. And according to the Bank for International Settlements, gold held at home runs no political risk. It is the only financial asset that runs no counterparty risk. In other words, this is not your debt that I have to count on you to pay, right? It runs no counterparty risk. It's a proven inflation hedge over time. And, gold is critical for you to have completely outside of the system because look at this little teeny thing. And this is a 1 ounce gold coin. And it's an easy way to carry a lot of wealth in a small little package that truly is outside of the system that I hold and I own outright. It's critical. Real physical assets were turned into financial instruments and then leveraged, right? So can I see something like that happening to gold? Well, it almost did, right? Because in Basel III, gold was became officially a tier 1 asset, which means at this very safest, highest level, and presumably bullion banks would not be able to leverage it, or they had to hold cash set aside if they were going to leverage it. But that was supposed to go into effect, 2020? I'd have to go back and look. I honestly don't remember exactly when that was supposed to go into effect. But what they did, it went into effect, but then they gave all the big bullion banks an exemption. So it didn't go into effect. So can I see that happening? Well, it almost did. And you would have seen the spot price of gold and silver explode like we saw with nickel. But that's because, according to the Bank for International Settlements, before they changed how they accounted things, for every 1 ounce of physical gold, there were 62,000 ounces of digital gold that never will exist. Well, gold is the primary currency metal, and it's the metal against which they revalue currencies when they do an overnight reset. Silver is the secondary monetary metal, and it has, while both of them are used in manufacturing, silver has a lot more manufacturing use. Gold does not get used up in production, in industry. It's all recoverable, so we can account for about 98% of it, all the gold that's ever been mined in thousands of years. Silver gets used up. It too, it is absolutely preposterous that it's trading at like 24, 25, 26 bucks an ounce when the ETF, the silver ETS, SLV, had to change their prospectus to state that the pricing, they couldn't get enough silver to create the baskets. So the pricing on the SLV was going to reflect the spot price, which is frankly all they were designed to do anyway. You don't really own silver or gold underneath it. So you will see silver move toward its fundamental value along with gold. And so when everybody is now on, I know this is going to sound crazy, but a lot of things that are coming to pass now that I said in the past sounded crazy back then. Oh, you can't say that. People don't know. My job is to tell you so that you can make educated choices. So what will happen is we'll go into hyperinflation mode, and then people will lose complete confidence in the currency, in the system, and they'll stop using it. And they'll go to a barter system. So you'll get real local for a while. That's where silver really comes into play.